In a bold move that could redefine the landscape of retirement savings, President Donald Trump has signed an executive order that paves the way for 401k account holders to potentially invest in private equity and cryptocurrencies. This decision, if fully implemented, could unlock a vast pool of trillions of dollars for these alternative investment sectors, which have long sought a foothold in the retirement savings market. While the immediate impact on individual retirement savings is minimal, the directive to federal agencies to rewrite rules and regulations could, in the long run, significantly alter the investment options available to workers. Once the changes are in place, employers will have the flexibility to offer a wider range of mutual funds and investments, including alternative assets like private equity, cryptocurrencies, and real estate. The Employee Retirement Income Security Act of 1974, ERISA, which governs retirement plans, requires employers to prioritize the best interests of their employees over Wall Street. Traditionally, retirement plans have been dominated by stocks and bonds, with a smaller portion in cash and commodities like gold. Trump's executive order aims to redefine what qualifies as a qualified asset under 401k rules, potentially benefiting the $5 trillion private equity industry and the cryptocurrency sector. The cryptocurrency industry, which has been a significant supporter of Trump's 2024 campaign, stands to gain from this move as it seeks mainstream acceptance. The price of Bitcoin, for instance, surged by 2% on the day of the announcement, nearly doubling since Trump's election. Under the previous administration, led by Democratic President Joe Biden, cryptocurrency investments were treated with caution due to their extreme volatility. Unlike traditional stocks, which might see historic moves of 2% to 3% in a single day, cryptocurrencies like Bitcoin and Ethereum can fluctuate by 10% or more. For cryptocurrency companies, which have donated generously to Trump's campaign and inauguration, the goal was to achieve ERISA qualification. The Securities and Exchange Commission, SEC, dropped its lawsuit against Coinbase, a major crypto company and donor to Trump's military parade. Under Trump's administration, this move contrasts with the Biden administration's stance that cryptocurrencies should be treated as securities. Cryptocurrencies, particularly popular among young Americans, have shown a generally upward trend since their inception nearly 20 years ago, despite their volatility. Corey Clipston, CEO of Swan Bitcoin, believes that Bitcoin's inclusion in 401k plans was inevitable, given its risk-adjusted upside over the long term. Private equity firms, which primarily rely on high-net-worth individuals and pension plans, stand to gain from access to retirement assets, which would provide a deep and stable source of capital. Blackstone CEO Steve Schwarzman has long dreamed of tapping into these retirement assets, which could offer higher returns than traditional stock and on-market mutual funds. However, private equity investments are riskier, more expensive, and less liquid. The Managed Funds Association, representing the private equity industry, looks forward to working with the Trump administration to create a framework that expands access to alternatives for retirement savers, offering more diversification and investment options with appropriate investor protections. The process of integrating these new investment options into retirement plans will be gradual. Major retirement plan companies like Fidelity, Vanguard, and T. Rowe Price will need time to develop suitable funds, and employers are unlikely to revise their retirement plan options hastily. It may take several years before crypto and private equity investments become mainstream in individual retirement plans. Vanguard, for example, is not committed to launching a product for defined contribution plans, but is dedicated to educating retirement investors about the opportunities and risks of investing in private assets. This move by President Trump is sure to spark debate and could redefine the future of retirement savings in America. But here's where it gets controversial. Critics argue that the volatility and complexity of these alternative investments could put retirement savings at risk. And this is the part most people miss: the long-term implications of this shift on the financial security of millions of Americans. What do you think about this move? Should retirement savings be opened up to higher risk investments like private equity and cryptocurrencies? Share your thoughts in the comments below.